Good morning. Welcome to Options Tender. We are going to go through SPY on multiple time frames, starting off with the monthly. We're going to check out three scenarios, what my primary is and what changes that primary, because we're right at that moment. And it's not a secret. You know, you can watch this video or not if you want to. On the Qs, the magic number is 387.98. We tag that and everything changes. And I'll show you on SPY what I mean. So if you want to get the full Qs analysis, I did that a couple days ago. You can check that video out. Okay, so SPY. By the way, if you're new here, go down to that bottom right-hand corner, hit that Options Tender logo. Make sure you subscribe. We do these videos as often as possible, so hit that notification button. We have a lot of important information for traders, so when that information changes, we have to change our view. So that's why I update so often. It's so important. All right, make sure you like the video. That's the best thing that you could do for this channel. Really appreciate it. Here we go. SPY on the monthly time frame. On this outlook, we had our 2022 move down, very corrective. Could this be over? I don't think so. I think we are just making a higher low, and I'm not sure that we even make a new high right here. Okay, we can draw a trend line from the top, from these tops, and put it right here. I'm not sure that we're going to make it over this trend line, and I believe it's because of the Qs. So go watch that video. We had this ascending triangle, had a reversal, consolidated for months on end, almost I think 12 to 14 months, created a huge demand area right at the 20 monthly moving average, came down to that point and bounced off of it very hard. We had that spinning top and then a huge couple of weeks, just massive move. And is it just a bear market rally? I do think so. It's not confirmed yet, but I do think so. Okay, we're looking at, let's go to, let's keep it a little more simple here. We have our MACD. Our MACD is it's crossed over to the bull side, just kind of bounced off. It just never really crossed over to the bear side here, so we're pretty neutral to slightly bullish. The RSI is getting a bounce. If by chance, the Qs are in the same position, but SPY, if by chance we get a new high here, we could have a possible another bearish divergence. But we do have a crossover, bear crossover already on the slow stow. So this continues to be bearish. We're looking for a lower high here in the RSI. And then we'll be looking for a crossover on the MACD for bearish confirmation. This is a really high time frame, so it takes time for these things to occur. So this is still kind of leading the way here on the bearish end. And you say, but you're just bullish the other day. I was, yes, it seems like whiplash. I was actually bullish to get a slight new high, but not all-time highs. And that hasn't changed yet until we get this confirmation. So let's continue to update things and check things out. Okay, so we have our weekly time frame. You see, still kind of looking at the same thing. We still have a lower high. We have 5 waves down here that makes perfect sense. The Qs don't have 5 waves. It's not an impulse for the Qs, so the Qs must eke out a new high for us to believe that this is going to be a lower high. Okay, so as of right now, we don't have that confirmed. And then, so we'd be looking for any pullback, we'd be looking for a higher low. All right, that's super important. That magic number, if it's hit, then we think our top is in with a lower high here in SPX. Okay, so we'll view on the lower time frames. You'll look at the 65. I'll kind of explain to you why I think that scenario is more likely at this point. Now, the weekly time frame, we're trying to cross back over, so we're basically back testing. We got the bounce off the zero line. That's very normal. Back testing, and this will be the question: will we actually start to get green histogram bars, cross over, and continue higher, or will we start to roll back over? The momentum is down. Will we roll back over? We're already in overbought territory on the weekly time frame. That's huge when looking for reversal indicators, and we're already in the oversold or overbought area on the slow stoke. Okay, just like all the other bear market rallies, you get up there and you turn. You get up there and you turn. Okay, we can look at our Williams R percent are in that overbought territory, and what we look for on bounces is just getting up here to be oversold or overbought. I keep saying that. Sorry, overbought, and then we identify with the RSI the overbought conditions as well, and that gives us our initial sell. You can call it sell conditions or our sell signals. And then if you're in a rally, if you're in a bull market, you're going to be looking for more things like this, and then you're going to be looking for divergence to form before heading back down. And you can call this your mini bull market there. That's just a massive move. It's such a massive move. That's why this stuff happens, because the momentum's to the upside. You had the positive divergence. Momentum on the weekly time frame is positive. Now that we lost that momentum's actually to the downside. And so we don't suspect we'll see all this movement stuck on the upside, very powerful moves. So we're not really looking for divergence, at least not on the weekly time frame. I think we already have it on the daily. All right. Let's go. We're in bullish position and bullish posture. We're above the 20-week moving average. So this is going to be our key on the weekly time frame to stay above this 20. If we don't stay above this 20, we break down from the bear market, in my mind, is confirmed. It's all about this 20. We're above it. We're in bullish posture, but we haven't had a pullback yet. All right. So once again, if we don't hit that magic number on the Qs, then all we're looking for a higher low, possibly to that 820, and then getting a bounce and going higher. I still think the all-time highs are going to be in. You're really going to have to convince me otherwise, because of the inverted yield. So this high, it could be taken out. That's at this point, that's all I'm saying. There's the two scenarios. So let's go down to the daily time frame, and I'll visually show you what I'm talking about. So first, with traditional technical analysis, we have this bearish rising wedge. Does it fill out more? That's going to be our question. Or do we have our lower high here, and we can continue with this channel scenario? This would be our least bearish situation, where we have an A, B all the way up here to the channel, and then C, 5-wave move down to end that, and then we continue a bull market. All right, that's our least bearish situation. I don't think that's the case, but we have to play it day by day. So we're back in this chop zone. We're not quite to resistance yet, so that's another key thing that I'm looking at that I think this scenario is likely, that we inch up just a little bit higher. QQQ tags that magic number. We get to resistance, possibly even to the channel resistance. But we're consolidating right now. We're not breaking down. We get to that resistance, and then we start with our descent from there. Maybe we can, okay, our reversal signals, we're starting to get, we have negative divergence, sell signals here. The histogram's starting to wane, but we are still technically in a rising position here. The momentum's to the upside. So that's why price isn't breaking down yet. You know, it still has this momentum going for it. So that we should start to see the roll over or get a divergence as we inch out a new high. We don't need to see negative divergence. To be on the again, this is a bounce. We don't need to see negative divergence, especially if we don't tag that magic number. We're just looking for a higher low, and this will probably backtest the blue line and continue higher. So again, that's we're looking at this slow stow right now. Negative divergence hasn't quite crossed over yet, so we're looking for that sell signal over the 80 line. Okay, now for the visual, let's go to the Elliott wave counts. Our primary count, without tagging that magic number, our primary count is an ending diagonal. Okay, so on the Elliott wave, we're just showing that we have an A, a B, and that we're looking for this to fade out with possibly an ending diagonal here. A big move to start off that ending diagonal. That's massive. Then I think, you know, the waves start getting shorter from there. 3 cannot be the shortest. So I do think wave 1, these would all be 3-wave moves. I still think this is a 3-wave move for 1. 3-wave move to 2. 3 would be shorter than 1. 4 would be shorter than 2. And just eking out momentum would be waning. Maybe we stop here at the 464 all the way up to about the 472. Making a new high here is what the important thing is. We'd be looking for resistance. We have this possible wedge top that we can make it to. But I think this ending, I don't think we make new highs. But we have about the 472 here. That'd be the top of this box of chop here. A lot of supply in this 472. So that would be our last target in this scenario at 472. All right, and then after that, that would end our wave B or 2. Right now, we're just counting as an A, B, and then whether it's a 1, 2, doesn't really matter because the same scenario is going to play out. We get that wave C or 3. Okay, so that's our primary scenario if the Qs don't tag that magic number, 387.98. If it does, wait, let's not go there. So our alternate from this plan is if we make a new high. If we make a new high, which I think this is the least likely case, that we have all this is going to end. We had a wave 3 top here, a wave 4, our correction's over, and we make a new high as an expanding ending diagonal, which fits perfect. It really fits perfect. It doesn't fit fundamentally, but it fits technically. So we'd have our 3-wave move up for 1, 3-wave down for 2, 3-wave up for 3. The 3 is going to be longer than 1. 3-wave move down for 4, and wave 4 is bigger than 2, so it's expanding. And wave 5 has to be huge. Wave 5 is going to be bigger than 3. It doesn't have to touch the megaphone top, but it has to be, I have this purple line here, that's the 100% extension from wave 3. So it has to get above, it can't be shorter than this purple line here, making all-time highs. So that would be the least likely situation, but it fits perfectly. All right, now if the Qs tag the magic number 387.98, then this will become my primary scenario. That this is the top. We have our A correction. We have our top here for B, and that we're pulling back 401, 2, back into the 78.6 area. We have these different zones here. This former 786 from the all-time highs, and perhaps just a little bit higher for the 887. Remember, we have that downtrend line as well. So 3-wave move for an ABC into that wave 2. So this is a zigzag. We counted a perfect 5 here. We counted 5 here. We thought the move was over. We get that little correction, and then CPI, bam. So we get a 5, 3, 5 for a zigzag, which is normal for a wave 2 pullback. And then we continue with a crash-like scenario. It's going to be much more steep than the first wave 1 or A. All right, it's going to be much more aggressive. But the scenario, we have to tag in the Qs, the 387.98. I'm going to keep saying that over and over. That's a big if. If it hits it, then this becomes our primary scenario. Okay, going down to the 65-minute. All right, with this 65-minute, here's the trend line that we're talking about. Also, that gap resistance is the island gap that we have there. That might be where we tag, where we reverse off of. We're barely holding the trend line. We're kind of moving. If I move it to the bottom, just touching this wick here, we're still holding this trend line, and we could bounce off of this trend line from here. Do we have room underneath? We do have room to go further down if we want to break the trend line and then start heading up. So there is room. We'll go to the Elliott wave on this time frame because we've only tagged the 23.6. That's very normal for a wave 4 to make it to the 38.2. So ignore this situation. This is if we don't make a new, that if we don't tag that high in the Qs. I'm expecting a pullback, make a lower high, and then go higher. But right here, just in today or tomorrow, or Monday, this might just be an A, B, and we come down to C. Maybe we gap down on Monday, go a little lower, and then head up. So we have room for support, but we're holding this 23.6 area right now, and we could move higher from here. Now, going back to the traditional, I'm just going to put on these here. Okay, so now the reason why I think this is more likely that we actually do go get that new high and the Qs tag that 387.98 is because, first of all, we're flagging. We're still above the trend. We do have divergence happening right now, and we're losing momentum, but we've already, on this sell here, we've already become oversold. And if we do it again, we're probably going to get divergence, a positive divergence on the 65-minute. So that's just not going to allow us to sell into that. And we're already making a higher low here. Again, if we come down all the way lower here, we'll be oversold if price decides to come back a little lower and test the gap area from CPI. All right, so we're not in the right conditions to be selling off yet. So I do think we go higher. Today it looks like we're just, and the reason why we're doing our video right now is because today it just looks like we're going to chop. So we have the whole weekend to talk about some different things. And so tomorrow I'll go back through the big tech and go through some of those on some higher time frames and lower time frames so we can see what's happening with them. But I think they support really the bearish situation. I did go through a lot of them. I zoomed through a lot of them on the last video. So if you want to see why I think they support at least the thesis of the bear crash scenario, then definitely go check that out. But we have to have that condition where the Qs, and I repeat myself over and over because the Qs have a corrective move. That corrective move has to play out. All right, it has to tag a new high. It can't be corrective and continue lower. That would actually be so much more bullish if we went lower and made new lows from here, new recent lows. That would be much more bullish. You'd have a big pullback, and it'd be like a 1-2 setup on the higher time frames, and we just continue higher. So it's just not likely. We are going into recession. It's happening. It's Fed induced. It has to happen. The Fed does it. There's no soft landing. So that's just all rhetoric. So we're looking to hold here. We're looking to make new highs. That's really all I have to show you. But the VIX is trying to make a bottom. It's as simple as that with the VIX. We have all sorts of positive divergence. It's just waiting. It's just waiting for the destination to be hit, whatever destination that is. And we keep making slight new lows with positive divergence. Okay, so to look at this in an inverse situation with the VIX, this is I have highlighted visually that this is that we get our bounce here on the VIX and we make a lower high because we'd just be back testing the trend line here. So if we don't get that, in either situation, if you're looking for the market to have a correction and the VIX would go up, back test this wedge and then make new lows, that would be more the bullish scenario for the market. Now, if you, on the daily time frame, I have a visual of what I think is going to happen if the Qs tag that magic number. This is a very large wedge that we broke out of during the correction, and then it's just back testing that wedge, and we get new highs well above this 35 area and probably over the 40 area as well. It's just a breakout, back test, much higher. So we're trying to get some support around these areas. I wouldn't be surprised if we move down just a little bit lower, trying to hold on to here. The Qs, they don't need much more. They only need, the Qs only need a couple points. They're 2.5 points away from tagging that, and I think they can get it. They might get it today by end of day, maybe the power hour, or on Monday. But either way, I think we're going to tag that. I think we have a little bit of just to eke out a little bit of that energy, and then I think it's going to be goodbye to the market. So that's all I have for you. Later on, we'll do a little bit more analysis. Maybe we'll go through a lot of the big tech and then do the dollar rates. I do think the rates decouple from the market. It has a negative correlation, but I do think that positive correlation is going to be at some point. Rates are going to tank and the market's going to tank with it. So that's my outlook. You guys, thanks for joining us. Thanks for having patience. I have these long videos, but I've tried to be very thorough for you. So we'll make another one tomorrow. Talk to you soon. Have a wonderful day. Have a great weekend.